Okay, welcome back to our channel, MegaWhale team. Thanks for tuning into tonight's video. I'm going to keep this one nice and short and sharp. We're not going to go too long tonight. I wanted to quickly jump on and talk about one thing, which was really this statement that I made on Twitter not too long ago. I said, I think there's a small chance we see a melt up to around $32,000 before the next leg down. We're going to talk a lot about that today and dive right into it on the short-term time frame and give you the reasons why I believe there's a possible chance that we see a move upwards and support that with some data. So to start with, we're going to look at Bitcoin, and of course, what we can see here is a very clear descending wedge. Descending wedges are bullish patterns where you have a downwards consolidation with two trend lines converging as the periods move along. So as time moves along, we generally see a upward breakout, and the measured move is generally taken from the highest point within the channel to the first initial touch. So we can go ahead and measure that from the market pattern over here. It's about a 9%. We can apply that to the breakout point. That brings us to around $33,000, just under $33,000. Now you're thinking, all right, cool, $33,000, we get back over 30K. But why is that significant? Why do I actually care a lot about that? Because that means we're breaking over the $32,000 trigger. And you would have known if you watched my previous videos that the $32,000 trigger level is a very significant level on the Bitcoin chart because it indicates a point of reversal for the short-term price. It indicates we're clearing this entire market structure over here, as well as getting back above the major level that we saw as a resistance back in January, as well as July. From there, I do expect a move upwards to either retest that 100-day moving average or pushing further into that $36,000 range. Now, supporting evidence for that move will be this chart over here. We can see that if we do push back above this midline, which will be that resistance, breaking that 32,000 level, we're going to push up to the dotted line. The dotted line will line up with the 100-day moving average, or pushing upwards into that higher range would be that $36,000 to $37,000 range, where we'd either continue upwards or see a strong rejection again and move down. And we talked a lot about this scenario here. I'm going to go ahead and show you this scenario here where we push upwards, break around over here for a little bit and push down. We talked about that weeks ago. It's still a very real possibility. So supporting evidence, guys, Bitcoin dominance is of course dropping. We have the support trend line over here that we talked about the other day, and we sort of spinning top candle is printing, suggesting a reversal in trend. We have seen that reversal, and it's not too far along yet. It's reversing. It hasn't fully flipped. We do need to break below this red line, as you see on the chart over here, for that in fact to actually flip and for the price to continue downwards and thus the market see a little bit of relief. DXY has been dropping pretty consistently for the last 7 days. It's down from around 105 to around 101. We do have support at 100. We have lower support obviously around 97 and some support around 100. So it'll be interesting to see what happens in the next few days, but what it is saying, it's saying the market has a potential to see some relief. And I do want to say the 16th of June, I think it is, we have interest rates rise. That's 2 weeks, a 2-week period where I think the market could see some relief. It could go upward for a little bit around the 16th of June, hit up in this trend line over here that would line up with 16th of June, around 36,000, and then crash back down for one final capitulation, potentially back down to that 200-day moving average. I think it's a real possibility. I don't think you should write it off. And I definitely don't think you should be having your rose-colored glasses on right now for either direction. And we've talked a lot about why you shouldn't be holding out mentally for one possible target and not being open to the upside or the downside right now. And I'm going to go back to the community question now. We kind of going to do it in the middle, but so it kind of ties in with what I want to talk about next. And the community question is, do you believe in the July bottom at 17 to 18K? And I think it's very important that I just reinstate what I said, because I feel like a lot of people are going to get the wrong idea. My original prediction in November 2021 was $24,000 July. It was not 18,000, it was not 17,000. Those were not my predictions. I always did say, however, those were possible targets for the absolute worst case scenario, but they were not my predictions. They were possible targets, and we have to be aware of those. As we can see in this chart over here, it represents $17,000 to $18,000 is a real possibility. If we lose this dotted line, we lose the 200-day moving average like we did in the past, we can definitely see that, guys. It's a real possibility. However, I do have to bring attention to this area here, where we do find support along that dotted line and we push upwards. So, like I said, it really could go either way right now. Now is not the time to be locking your decision into bullishness or locking your decision into bearishness. The price is down a significant amount, like what, over like 50, 60% since we called the top. I've done my job. I've called the top. I've done my job. We hit 24,000, tick. My target was ticked. I have no current target right now. I don't care what happens. I'm playing it by the day. I'm waiting for either the price to break past my bearish invalidation, which is short-term 32,000, and long time frame. So macro time frame is, of course, if we zoom out, which is this trend line over here, which is that 44,000, right? Those are my macro invalidations, sorry. Macro would be above this trend line here, above this level over here. This is 48,000. So short-term 32, macro 48, mid-term would be breaking above this downward trending resistance. But like I said, those are my invalidations. And until then, I'm expecting lower prices. So I expect lower prices until one of those things happen or multiple things of those occur. All right, and that is how you should be playing right now. You should be aware we've dropped a lot. We're coming down to significant support on the charts. We have significant support here. There's no doubt about that, guys. There's significant support. Obviously, if we take into consideration the global economic situation, potential threats for a recession, and just world policy and stuff around surrounding crypto, it's not looking favorable. There could be some backlash. There could be some more downward bleed. But we do have to agree that we're at major support according to historical data, and we're seeing some sort of potential short-term reversal here with an ascending wedge. And I think just saying no, we're going down is kind of stupid right now. And I think just saying no, we're going up is also stupid right now. I think right now you have to be aware. I had someone call me out the other day saying, Whale, you're just telling us we're going up or down. No, that's completely the opposite of what I'm telling you. If that is what you're taking away from this video, you're not listening to what I'm saying. What I am saying is we're in a period of massive indecision right now between a major trigger, which will flip us short term, and a major support on the macro time frame, which is this dotted line, which is around $27,000. All right, which we're just literally sitting right above. We're $2,000 above. $27,000 is this support line here. What I'm saying is, during this range, you should not be overly bearish or overly bullish. Wait to see what occurs. If it flips here, you can be short-term bullish, and your target will be 36 to 37. If we lose this level, however, you're expecting 24, potentially 17 to 18. So anyone saying, Whale, you're just telling us we can go either way. Again, you're not listening to what I'm saying. Right now, I am preparing you for the future. Listen to what I'm saying, apply what I'm saying, go to your charts, put these levels in. These levels don't lie. These support demand zones do not lie. They're telling us what to do. The chart is literally, the charts could not be more obvious right now. They're incredibly they're helping us. They're incredibly helpful. They are quite literally telling us exactly what to do and exactly when to do it. All you need to do is listen to it and accept it. Don't try overcomplicate it. Don't try confuse yourself. Understand the resistances and supports. When they flip, you act. Right now, we're in a sideways consolidation. Right now, we're in a short-term bullish pattern that has the potential to move upwards and is suggesting a potential move upwards. Therefore, we should listen. If it's suggesting a move upwards, we should be listening to that suggestion, and we should be considering that in our analysis and potentially planning for the result of that upward move. All right, guys? So that's kind of all I wanted to talk about today. I just really wanted to come on here and tell you guys that the main topic for today, like I said, was to be optimistic for upwards and be aware of the downwards move. And right now is not the time to be making rash decisions or investing a shitload of money. Right now is the time to be planning your course of action depending on what occurs. And yes, you can trade right now. You can trade altcoins. Altcoins are looking pretty good. I'm looking at some altcoins right now. You can see Gala's popping off. I actually might enter Gala right now. But for Bitcoin and the cryptocurrency market, we have to be more patient. All right, guys? Patience is how you win trading. If you're rash and you're a quick thinker and you're quick to act, you're never really going to make it in this game. It is a slow burner. You have to be patient and you have to wait for the entries. Let the trades come to you. If you're searching too hard for trades, you're not going to get them. All right. I just want to finish off, guys, by introducing Bitget. I'm going to leave it down below. And if you do have any questions about today's video, go ahead and leave them in the comments below. I'll be happy to answer them. And most importantly, guys, your community questions are always favorable. I love answering community questions. If you want to submit a community question for next video, just go ahead and leave it in the comments. And finally, at 3,000 subscribers, we're going to be giving away a couple $100. We're going to choose 3 winners. Every single person who subscribed to this channel will be automatically entered into the draw and into the giveaway. So all you need to do is hit that subscribe button. You're automatically entered. All right, guys. That being said, I'll catch you in the next video. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video.